Boom, we are live, ladies and gentlemen. We're just going to take a quick look at all the markets again today. Nice, easy update. Not a whole lot has changed, but just for fun, we're going to go over the few small things that have. Again, whether this turns into a reaccumulation range or not, I don't think is as clear as some people think. Again, the first few that led us up to this point, I was very confident about. This last one, again, my confidence level was very, very low here. I started to increase here because I thought this was a spring, and I'm basically all out of my positions. Now, on the smaller time frames, here we are on the daily. We can see there's some of the RSI and stochastic indicators I like to use. So just for fun, we'll go over the hash ribbons has still not turned back green, although we're in the nice red. Here, MACD is just about to cross over, not the middle line, again, which is a very important area, but at least where the selling is starting to diminish, and it looks like we might cross over here, so keep an eye on that. One of the other things that kind of jumped to mind was where we are in the... there's two big, large inflow days the last week. We can see that in a few different areas. The majority of which came from Fidelity, it looked like, and 118 from Fidelity and only 29 million in selling from Grayscale, and then the day after around 171 million from BlackRock. So, some fairly big inflows. So there is accumulation taking place, but largely speaking, what it's pretty easy to look at least from where we are now. The price always wants to try to find a balance first before moving up. Now, when we were down in the bottom of the bull market, the start in October, I started screaming way back here, go long everything. Lost a lot of the confidence up here. Now, before this moment took place, I had suggested we would see some type of accumulation range that took place here that was quite volatile, because you're dealing with a big basket of volatility that does hold us all the way down to around 47,000. And that's also around where the huge swipe of liquidity took place for the ETFs to begin with. Now, generally, when you have these long market accumulations, the markup is equal to the time spent in accumulation, which is actually pretty similar to where we already are, which is one of the 469 days in accumulation, including the SOS. And then from SOS to breakout, we're at approximately 275 days. So there's about another 100, 200 days of kind of hidden volatility, I think, within this accumulation period that we could see. So I don't feel there's a large confirmation either way yet. I think it could just as easily go both directions, especially with how much money printing might come on in the next short little while. But for now, again, it's important to note, largely what we're seeing is wick to the downside and staying below the 200-day moving average. Every time we try to jump above the 200-day on each of these candles for the daily, we've just been sold right back down below it. So first, that's important to note. The 314 is down here around the $49,000 mark as well. Now, jumping over to the S&P 500, we were actually at new all-time highs yesterday. And this morning, we've hit a fairly significant bar of sell pressure come in. Basically since this morning. So we've made a post. It was at high. We are looking for some type of potential distribution to take place. 1.7%, not huge. A big question is, do we start to, again, break out past this 570 mark? This is about where we're about to run into some pretty major resistance here for this previous move up. And we're also a few hundred days into this move. Again, from the bottom of the box to accumulation, around 520 days. From the SOS to the backup, we're about 300 to 200 days. So very similar to Bitcoin, although the S&P 500 has just basically been moving into new all-time highs consistently. If the Federal Reserve comes out and cuts rates, I'm not sure it will do. It really depends on what that does for the average Joe's spending capacity. Do they start taking out more debt? I'm unsure of what that means yet. It's hard to say. Markets are kind of finicky because they rely largely on human emotion. But here, again, we'll zoom in on the 6 hour. The accumulation range that we've been following for gold has jumped right back to the top of the range, which is a pretty significant move for gold. And what appears to be an accumulation range. If gold starts to break out here, you get the backup in an SOS. Gold's been in an accumulation area for quite some time. So we are in almost a decade-long accumulation from the early 2010 to 2020. And then we have just started the breakout. So this looks like a perfect cup and handle to me. This is what a traditional cup and handle through accumulation looks like. And again, you could chart just even more aggressively that there is a really beautiful accumulation channel down here. But often we see them separated like this. Your top part of the distribution comes down into accumulation, comes up into the SOS, and then starts its big move to the outside of both of those trading ranges. So that's what I think we're going to see here for gold. Big moves for gold will show weakness in the dollar, will probably show strength in most assets. But we're going to want to keep an eye on it just because we're in such uncharted territory. Over to Solana, back at the bottom of the range here as well. On the weekly, let's take a look here. Yeah, all right, this is what I wanted to do. On the weekly, what's interesting is we're actually seeing a fair amount of accumulation. For Solana, the MACD is about just to cross over. The stochastic RSI is about to cross over. I'm always confused these. And the MACD is still turning down. So it'll be interesting to see what happens when the stochastic RSI crosses over. But for now, we're still in largely what could be considered a downtrend. Now, I was looking at SWE this morning, just because I like to hunt around and figure out where we are in comparison. So this has the last few months of our drawing here. So nice to see our falling accumulation range, bullish reaccumulations, and then distribution start to take place. And now we're pretty much all the way back to where we were in October. So we've returned all of the gains from some of these assets. I mean, that's a 2 to 3x for SWE here, not a huge move, but a big enough move. For Solana, we've got a long ways down to go to November, December. October would be $26. I don't think we're going to go that low. Fetch. Yeah, when I drew this and I wrote distribution for Fetch, I was right. Again, I switched bias halfway through. That was my mistake. I think I was right. It made sense to accumulation, reaccumulation, distribution. Accumulation, reaccumulation, likely distribution at the top of this range. So the aggressive stop losses made sense. But next time, I think it'll be even better. I've gotten really good at noticing the bottoms of accumulations and calling them. Like we were screaming long here in November for Fetch. So yeah, it looks good. It's just these just tops have always been a bit difficult. I need to find a better way to be greedy in my own life, I guess, and enjoy the things that I want to. But nonetheless, we've fallen significantly here for into distribution. So until we see something that says accumulation, I'm not going to change bias. At this moment, there's just no reason to. But we might be there. It just until more data arrives, there's no sense in calling it early. Otherwise, it's just a falling knife. It could easily just drop down into even further distribution. So patience there is key, because if an accumulation range does take place, it's going to be nice, short, and sweet. I think it could be similar to what we saw here if we scroll back on Avalanche. After the first reaccumulation distribution took place, we saw like a 60 to 70% markdown. And then we saw this nice long reaccumulation range take place that was around 117 days. You can actually go back and watch my videos. I pulled off a fucking awesome trade right here that I wrote up for a nice, almost like a 20x. So, sorry, I didn't show the rest of the chart. Almost a 20x up to the top from the bottom of this reaccumulation range here. So I'm suggesting maybe what we're seeing is something similar. We've just hit distribution. We're going to come down. We're going to fall into some type of accumulation range for these assets. And then we're going to see the last final gasp of the markets here. So I think very similar avalanche through that distribution, down 60 to 70%, find an accumulation, which was another like 70 to 80 days basically. So I think we're probably just at the start of that 70 to 80 days of accumulation before we're going to see any real signs or signals. If it breaks down below that, well, then we can X-nay. But at this moment, I still want to lean bullish just because we had such a long-term move coming into the accumulation to begin with, that this just looks like a fairly healthy SOS and backup period right into the bottom of the trading range potentially. So only time will tell, but in the past, this has usually been pretty reliable. It's the length of the first part of the accumulation range and then extend outwards. So that should mean we have another 200 days of volatility to the upside largely. Anyways, this is Tio with the Arcane Bear. Just a quick little update. I'm leaving the Bear Den tomorrow and then on my way to Dubai. So bear with me as we fly around the world, and remember to like, subscribe, hit the notification bell, all that. I'm going to just try to produce a video Monday through Friday, even if it includes me just talking to the cell phone again, and try to get back into the habit of creating for creation's sake. So thank you all for joining along the ride. See you again in the next episode.